I hope you enjoyed your Fed Day this week, as we all certainly did, and we got the news that many were expecting: the central bank hiking interest rates once again, now bringing the federal funds rate to a range of 4 3/4 to 5. Give me your take here. What are we looking at?
Well, they were stuck between a rock and a hard place. If they didn't raise rates, inflation was going to come, roaring back. But the fact that they did, my fear is that it could cause, more bank failures down the road. You've got all these assets. These banks bought these assets, including mortgage-backed securities, long-term treasuries at a much lower rate. And you just wonder how much the feds can withstand, exchanging those rates at, 60, 70 cents on the dollar.
We heard from Chairman Powell. He said that the FOMC committee he did consider a pause. He was asked that during the Q&A.
Yeah.
It's not like he came out and said it in his prepared remarks. So that's why I always appreciate the questions reporters in the room ask. Said, yeah, we considered a pause, but in light of the banking crisis, Ed, that you were just alluding to there, ended up deciding to hike on hotter than anticipated inflation as well as labor market data. And notably, the chairman did not mention ongoing increases, changing some of his rhetoric. You think a pause could be in store in the near future?
Yeah, and I think they're going to have to. If they do pause, inflation is going to come, roaring back. And it really is. They even said, they were going to push interest rates to the point where they broke the economy. And I think we're kind of at that tipping point right now. And if they take a pause, inflation is going to come, roaring back. And so then, I wouldn't be surprised if we do not only take a pause, but, wind up lowering rates, before the end of the year.
To me, more important than the hike of 25 basis points was the forward-looking guidance. We followed the Fed projections very closely. We did get another dot plot number yesterday, which, of course, we don't get for every Fed decision day, but we did get it yesterday.
Right.
And the anticipation is that rates, at least here in 2023, will hold at 5.1%. That's what the FOMC said back in December. What does that tell you with regards to assuaging any concerns out there investors may have had who did not want to see that number go north of 5.1%?
Investors, I think the market is going to like that, but I still think it's going to be pretty volatile. There's so many uncertainties going on, from the banking sector and how that's going to trickle down. We're already starting to see a lot of these regional banks, losing depositors, going to the big four banks. And I think that that's going to have a continued effect on the markets. We saw what happened to the markets as Powell was actually speaking. I think we're going to have a pretty deep recession before the end of the year, and it's going to affect the markets.
Do you take Chairman Powell at his word that the goal is to bring inflation back down to 2% and that they will maintain that goal no matter how long it takes?
Yeah, I think that that's going to be unbelievably difficult. I mean, when you look at the 100-year average is, right at 3 1/4, a little bit less. And he's, wanting to bring it down, 1 1/4% below the 100-year average. I just don't see that happening. I think we're in for, inflation, maybe not at the 6% that we're at right now, but inflation is here and it's here to stay.